Hey guys, I hope you're well and welcome to another episode of 600 Seconds of Trading. My name is Alejandro Zambrano, Chief Market Strategist with Trade Captain and Amana Capital. And today is December 28th, 2017. So, in today's update, we're going to provide you guys, as we usually do, an update on the Eurodollar, Bitcoin, USOIL, gold, and the DAX 30. But before we do that, as always, I need to stress that trading financial markets is unfortunately risky, and there's a risk that we'll lose all of our invested money. So please bear that in mind before you start trading. Okay, good. So just so you know, today we're doing an offline recording. I wanted to do a live webinar this morning, but had difficulties to do that. But tomorrow we'll be live on December 29th. And then, of course, we have New Year's Day and so on. So we'll be back after that in the next weekend and the new year. But for now, let's begin. And as always, please bear in mind that trading financial markets is unfortunately risky. There's a general risk that we'll lose all of our invested money when trading. Okay, this is the euro versus the USD. And the market, as you know, has been trapped between 1712 and 1964. Now, over the last day or two, we've seen the dollar weakening against the Aussie, against the New Zealand dollar, against the Canadian dollar. Gold has been gaining as well, and we're starting to see similar moves here in the euro. Now, because it's the end of the 2017 and then we'll have a new year, it could be a little bit messy, a little bit tricky, a little bit of false moves. But I suspect that if we take out 1964, which is this high here created on the 27th of November, then traders may potentially aim for price to rally even higher, and taking out this level might lift the market up to 120.93 and take out this level, and we can head up to 126 or so. So we're finally potentially leaving this consolidation phase, and I think this market could potentially go up, and then traders will most likely, well, at least initially, maybe use the 118.16 level as some sort of a stop. Maybe actually we can reduce it a little bit to 18.41 with a break to the upside and then probably down and then up again. But as long as you trade, actually let's leave it here at 19.26. I'm gonna remain bullish. Okay, here's the price of Bitcoin. I hope you didn't miss out. Amazing moves here in this market. As you know, we've been bullish here, and I was bullish from these levels more or less, and unfortunately got stopped out and the whole market just collapsed. But this is why it's important to use stop loss orders, and this is why to have the discipline. The whole market plummeted with about 43% from the high, but we got out for a loss of about 15%. And obviously when you had these sort of moves, you know, you can buy on the dips. So yeah, you take a loss and then maybe you buy for slightly lower levels, and I think this is really what people have been doing. I mean, if you look here at the charts, you know, we had a test, we had a strong decline, and then you had a test of these lows here on the 27th of December. Then we went up a bit, and when we went up here, we dented the very short-term downtrend, because you can see we price was creating lower and lower highs, but now when we took out and then price moved up here, it neutralized this level. Now going forward, I suspect that as long as you trade above this low, and this low here where price spiked down to is the 11,132 level. Okay, and I think from where we are more or less, I think traders are potentially looking to buy a little bit. That's what I think, at least. So the different ways of attacking this, you know, I wouldn't go all in to begin with. This is cryptocurrencies, right? So, you know, it's not like trading your Eurodollar. You trade your Eurodollar, you'll have your money there in 20 years or 10 years. But here you don't know. You know what's going to happen. So, whatever. Imagine we have a portfolio and it has, you know, $100. Then on these sort of dips, some people buy a bit. You know, maybe buy maybe 40% of the portfolio, or maybe up to 60% of the portfolio. Maybe not just on this currency pair or currency market, but looking at other coins as well. but again, maybe going in maybe 60% of exposure. And then when the market finally breaks, so when it finally ends its downtrend, which it potentially did here, I think traders are gonna look to add more to it. The fact that they're not fully invested allows them to maybe get in at slightly lower levels, or in the case of a total failure of these markets, they would limit the loss. Obviously, the idea is not to lose 60%, but you get the picture, because even in a downtrend, you have a corrective move. At the end of the day, though, I think this for now, I want to be bullish above 11,132, and I think around these levels, maybe go down to 18,000 or 12,800. I think traders are buying here. In 2017 alone, we had 6 prior experiences of these sort of declines. You know that if you've been watching our educational webinars. So this is a decline of 43%. And not so long time ago you had another decline here. This is 30%. In fact, it tends to be 30. Sometimes it's 40. Oh, sorry, 50. If the market would decline with 50% from the high, then it's gonna move down to maybe 9,703. And I think from this level we would really pushing ourselves. It might go down to these levels, but I don't think that's the case. If you look across other coins, you're starting to see stabilization. So I'm personally bullish, and I think around between current levels, I think the market is going to try to resolve itself. And then if it doesn't, it might slip a little bit lower, and then we'll see what happens. But if you're trading short term, then the level you want to watch is really 11,132, which is this level we spiked down to. And in worst case, again, we push a little bit lower here. Now, this is the price of US oil. And US oil, you might remember the market was trading sideways. There was not much happening here, a bit like the euro. And the market took out this high here, which was the 58.50 level, more or less. And I said, this is a level to buy. So obviously, some traders are already long and a nice healthy profit, and I do think this market can continue to head up to maybe 61.25, 60.50 or so. If you look at your daily chart, you see there's a massive high to your left here, so maybe we shouldn't push too much. But I do think, if one is long here, I think the market here could go down a little bit, but eventually higher. So on a pullback here to maybe $59 per barrel, I still think the trader is going to look to go long and buy, and I think most people have their stop loss orders at 57, 56 down here. Here's the price of gold, and the price of gold, unfortunately, the bearish idea I had didn't work out. So I had an idea to sell pretty much around here. The market moved up, got stopped out. I think it was a loss. Was it $15 or $17? Yeah, I think $17. And the market just continued to head up higher now. Now, it's funny times. Is this a complete bottoming out process? Going to head higher? Maybe yes, maybe no. But it is heading straight into these resistance levels, so it's definitely not the time to buy. So I think it can go up a little bit more, maybe try to take out these levels, and then maybe if it goes down, we'll look to go long. But for now, I'm not 100% sure what's going to happen here. It's a complex market, and obviously for now it's kind of following this sort of pattern. But obviously, if that is the case, we didn't buy at the right level, and that's the end of it. There's other stuff to focus on over gold, really. And it's the DAX 30. Now, there's very little activity here in this market compared with other markets. The Germans are not really that interested to buy their own DAX 30, and it looks like other traders as well having the same issue. For now, nothing has really changed in relation to the actual ideas that we presented to you guys over the last few weeks. As long as you trade above the low here, which is 12,984, I suspect this market could head to the upside. And there's really no reason at all to change this bias as long as you trade above this low. Take out this low and this market could go down a little bit further. But for now, again, no reason to change this. Alright, tomorrow, 9 a.m. London time, join me for a live update here. And then again, we have a few bank holidays coming up in the UK. And we'll definitely be back as soon as they are over. Have a good New Year if I don't see you guys tomorrow morning. Thanks.